Hello. What's going on, everybody? Welcome to a Capital Hungry Monday Market Update webinar. We are going to be taking our time going through some current fundamentals impacting the currency and equity markets, of course, gold, precious metal that we trade day to day, looking at economic events to come, understanding the market timing as we're starting a new quarter, of course, Q4, and then doing some intraday analysis for trade ideas on gold, GJ, GBP USD, EURUSD, USD Cad, and US 30 stock market index. How's everybody doing this evening, night, morning, depending where you are around the world? Usually we don't get too many live viewers during the Monday market update or the Friday self-development video because people usually just come to the live scalping sessions. People just want to be entertained or make money fast and get their little dopamine hit and get their little adrenaline rush, but nobody really wants to put in the work long term. But I appreciate the people who show up to these Monday market update webinars, so let's dive into it, shall we? Okay, so some recent fundamental points that we want to focus on. We do understand that we're starting Q4, of course, just starting the new 3-month and monthly candle. So we have had some significant pullbacks to collect order flow for some potential continuation moves following the macro market sentiment of the Feds getting closer and closer towards tapering. From the last FOMC and the last few press conferences by Jerome Powell and other Federal Reserve speakers over the last couple of weeks, we can see that in one section, economic data is going back to pre-pandemic levels, as well as more people are starting to go back to work, get further vaccinated, and the Feds are giving more signals that they could start the process of tapering the stimulus support in November or early 2022. And the tapering timeline itself would be very short and brief, only going for like a 4 to 6 month period as they start to decrease the asset purchases, quantitative easing, and other things that they've done to, of course, inflate the economies and inject the economy and financial markets, right? So with that being said, we can understand as the start of Q4, when we're going to look at some major players, for example, like the US dollar, we're going to be able to anticipate that it's in a bit of a pullback structure. Same thing with gold, and we do have the potential for deeper pullbacks as, of course, it's the start of a new quarter, right? The focus this week in terms of dollar movement, and we know because of the Federal Reserve's monstrous asset purchase program, how they exponentially increased the US money supply over the last year and a half, that the correlation between dollar and other assets has been massive. So if you can understand and learn to track dollar movement on an intraday perspective, it's an amazing tool to use when you're trading pairs like GBP USD, EURUSD, USD Cad. It's easy to understand equities movement, very good for a correlation factor when you're trading the precious metal gold. And so we'll look at the dollar in a second. But today, during New York session, we did get some inflation risk fears that came from Federal Reserve Speaker Bullard. I'll search that up and show you guys here in the left of your screen. So here, during New York session at 10:13 a.m. Eastern, Federal Reserve Speaker Bullard was discussing the risks of inflation going to the upside and how he is extremely concerned about that, right? What this led to during the New York trading session was an upside spike on gold after failing to break 1751 because investors hedge inflation risks and fears by pooling money into gold and other commodities. And we also saw market fear pick up in the short term when he said that comment. As you can see, Japanese yen had a bit of a spike from previous lows around 89.5 standalone, which led to an intraday drop on pairs against the yen. And besides gold going up and the Japanese yen having an intraday spike from its lows, we can also see the equity markets at that exact time post NYSE open when he said this comment regarding risk and some other comments regarding the risks around inflation. The stock market also saw a profit taking by buyers and more short sellers jump in the short term. Japanese yen picked up strength, and you could see this intraday drop on pairs like GBPJPY. And gold, which obviously investors hedge inflation risks by pooling into gold, you can see failed to break this liquidity zone, created a higher low, and pushed to the upside, breaking above the 1764 price point after having a very aggressive bounce at the 1720 demand zone. So we want to keep this in mind as we zoom out and do our analysis on gold and other pairs, and we will be doing a little bit of higher time frame analysis going down to the intraday time frames. But something cool to understand, I posted a YouTube short about it, you guys can go watch, but interesting to see that one Federal Reserve speaker brings the talks to the table at 10 a.m. Eastern about inflation risks, and you see the entire financial markets sort of follow suit in that intraday period. You see gold spike up, you see Japanese yen pick up strength, so GJ drops, you see the stock market drop at the same time. Very interesting how you can line up the fundamentals and technicals. In the private channel, we use that to our advantage to take the buys above the previous highs and say for a continuation move from 64 up to into like 70 retest. So that was pretty nice in terms of New York scalps. But anyways, something to understand, that Fed's bullard inflation risk fears did have a bit of a short-term impact on the financial markets when we're looking at gold and so forth. But we still want to keep the macro sentiment in mind when we start to zoom out and do our higher time frame analysis on gold and other pairs, which I'll show you guys in a second. Okay, so economic events. It is a holiday, of course, in China. At 4:30 a.m. Eastern, we have some UK composite PMI, which is going to be impacting GBP. Most likely going to be stronger data, and I'm still personally in a bullish bias on the higher time frames on GJ anyways. At 10 a.m. Eastern, or sorry, at the US IM at 10 a.m. Eastern, the US ISM non-manufacturing PMI, which is going to be in focus for dollar movement, of course, and impact on dollar, gold, and US equities. And then Asian session the following day, 9 p.m. Eastern, New Zealand interest rate. Okay, so now let's look at gold here. We're going to go to the 1 month time frame just to understand the historical repetition phase we're in that I've talked about in many webinars. But you can see the last monthly candle still closed bearish, and we're still respecting overall bearish market structure. And in terms of the historical repetition post 2008 crash period, I'm still seeing us in a similar phase to potentially continue down in the long term, as long as we still get rebounding US economic data, continued increase in vaccinations in the US, no further lockdowns, and of course further tapering confirms from the Feds. Okay, so in terms of the historical and technical repetition, this was obviously post 2008 financial crash period where you had a heavy inflation in the price of gold because obviously inflation was high during this time, interest rates were low, market fear was high as well. Gold was a part of the Federal Reserve's asset purchase program until you peak these all-time highs and then enter this bearish corrective structure for an extended period of 2 years, until you have to understand it's not just the technical, it's not just the pattern, it's the fundamentals behind it that create this pattern and historical repetition. You have to understand. So this is when interest rates were low, US money supply was high, inflation was high, market fear was high, the asset purchase program was accelerated as well during this time period, not even close to what it was here, but still the same sequence of events. Then years later, you have the Federal Reserve start tapering off that stimulus support, and also what that does is combat inflation, make the US dollar stronger again, and decrease the demand for gold. And you can see gold have this downside move after failing to break that liquidity zone low, you have this little bit of a pullback, but as the Feds continue the tapering process, gold enters this bearish market structure, right? Same thing here. You had trade war negativity that brought market fear, where Trump already had the Feds cut interest rates with the trade war disruptions to the global economy he was bringing. You already had, obviously, the potential for the world war that was almost going on with Iran prior to the pandemic. And then you had the main impacting factor, the pandemic. What's important is behind the scenes, the Federal Reserve did the same thing, where interest rates were low, inflation was increasing, US money supply was heavily increased, gold was a part of the asset purchase program, and gold peaked into new highs. You have multiple bounces at this higher time frame demand zone, but fails to break, just like you have here. And this bearish corrective structure overall created. And what have we seen over the last few months? That the Feds have been getting closer to tapering the stimulus support and coming out of the pandemic state, as the overall pandemic timeline was a far more accelerated and faster compared to the 2008 financial crash. So what looks very probable is that this new monthly candle is just creating a bit of an upper wick, and what that means behind the scenes is more seller order flow is being collected, where if economic data is still strong, then you can expect us to take this phase down here back down to these demand zone lows, which is the 1700s and 1680s. And if the Feds give further confirms that they're coming closer towards tapering, you're going to start to break this area. The US dollar will go bullish, and then obviously gold will enter that bear market again. And the cycle repeats, the economic cycle, the market cycle, the transaction between buyers and sellers on a positional perspective, it just repeats, and you'll probably have gold come down to like the 1500s before continuing bullish again, right? So what I'm seeing here is that this new monthly candle, we're having a pretty aggressive pullback, but in my opinion, as long as we still stay below the 1780s, right? As long as we still stay below the 1780s, then fundamentally, if we still have those further confirms, we're just going to be continuing back down bearish. But what we can see on the intraday time frames is from this low printed, and especially with the inflation increase in the short term, every time a low is printed, you get a very aggressive pullback, and this pullback makes even more sense of it being even potentially deeper to go up into the 1780s and retest this area for better risk versus reward sells, right? But you can see we've been in this overall structure where you have impulsive down moves, very aggressive pullbacks. But in the short term, we have some intraday bullish market structure being respected, and the dollar in bearish pullback fashion still. And I still see the potential for gold to come up into the 1780s, 1785s before it ends up flipping bearish and continuing back down with stronger US economic data, and of course further tapering confirms by the Feds, right? Okay, so we can see that for the time being we're respecting this previous demand zone on the daily time frame, and we do have some stronger bullish price action. And this upside move was influenced by the inflation scares that I was telling you guys that Fed Bullard brought to the scene. So these are the intraday trade ideas I see on gold, as I can still see us potentially having a deeper pullback on the new monthly and quarterly time frame before continuing bearish. Okay, so right now we can see some stronger bullish market structure developing. If we don't break these current highs at 1759 or 1764, still looking for intraday buys, as well as above 1772, still looking for intraday buys as long as US dollar stays relatively bearish in pullback structure to retest high risk, high reward sells at 1781. Okay? And then I see the high risk, high reward sell orders getting collected from that retest of that monthly price zone I was showing you guys. And then continuing that in that fashion. The only way I would see safer sells from current price points is if we were to come back below 1751 here and we don't go to collect further sell orders from 1781. We would either need a break below this liquidity zone, fully correcting that upside impulsive move, showing me that the comments Federal Reserve Speaker Bullard said are getting faded out and the sell orders are coming back into the market. Or I would need us to come up to collect more sell orders at 1781, that monthly retest point. For the time being, if we don't get the break below this area or the rejections at these high points, I see this intraday bullish market structure extending and potential buys up to these points. All right. This is also going hand in hand with the potential that the same time gold is doing a pullback from its lows, the same time EURUSD is doing a pullback from its lows as well, the same time EURUSD is also doing a bit of a pullback from its new lows printed, and USD Cad from its intraday highs here is obviously following only the dollar movement, right? Because dollar overall is very bullish on the intraday time frames, but you can see that it's very normal in the way dollar behaves, that when you have these significant highs printed, dollar can enter these pullback phases that can be very aggressive and can extend for a period of days or weeks. So US dollar in the short term could have this pullback just coming down all the way to 93 and still be bullish on the higher time frames in this ascending channel, with the tapering being further priced in. And when you look at the historical repetition of the dollar, whenever it is bullish, it does tend to move in these more aggressive waves, having very strong pullbacks, but still making its way to the upside overall. And when you look at other correlated pairs, for example, like EURUSD here, and you were to look at the weekly time frame, look at this repetition here, right? This is the weekly time frame. This is a very strong higher time frame demand zone, area of interest. Look at the difference between the bullish trend when dollar is weak, right, compared to the historical bearish trend when dollar is strong. You have the same equal price points being met, but you literally have, in a year, you go from the low to the high. This takes like 2 years here to come back down to the lows. Here you did it in a few months, 6 months to a year. So it's not going to be out of the ordinary that as the Feds do start to taper the stimulus support, that we are going to be making our way down on EURUSD on the higher time frame as dollar strength comes back to the table. But this is the way this pair is going to be behaving. Do you understand? So when the Federal Reserve starts to taper the support and dollar strength on the higher time frame comes back to the table, EURUSD will be trending bearish, but it will be behaving in this fashion, versus compared to the stronger impulsive moves that was following the Federal Reserve stimulus and extreme weakness in the US dollar, right? But anyways, dollar is still in this pullback structure. You've had highs printed, it's the new monthly and quarterly period, but still very bullish on the higher time frames. We just have to watch these areas of interest to see where we're pretty much going to retest and have the dollar buyers come back into the scene and continue with the bullish trend. Until then, we are playing this short-term dollar weakness to our advantage. Obviously, we're going to have to watch out for the US manufacturing PMI data tomorrow. Sorry, is that the one? Yeah, the ISM non-manufacturing PMI data tomorrow. That's at 10 a.m. But even overnight London session and pre-New York hours, if dollar continues bearish in this fashion, then in the short term, there's still higher probability gold is going to do those deeper pullbacks and continuations to the upside to retest better sells at 1780. There's also the higher probability that GU will do a deeper pullback here and continue its pullback structure, especially as we're coming back above these lows, and the GU pullback can even extend all the way up to 3.7 before continuing back bearish. As you can see, the aggressive pullbacks on dollar pairs across the board, but at the end of the day, overall bearish market structure is still intact, right? But you don't want to start selling GBP USD or selling EURUSD or selling gold when it's in a pullback phase. That just doesn't make sense. As a day trader, as a scalper, you want to play the market waves accordingly, right? So what we can anticipate right now is that dollar is still relatively bearish in the short term, and the majority of pairs against the dollar are in pullback structure, whether that's gold, right? Whether gold's in that pullback structure from the lows printed, whether that's GBP USD here in the pullback structure, whether that's EURUSD, whether it's UCAD, which is the inverse and can come all the way down to 1.25 still. Okay? Is everybody following along so far? I know it's a lot of information to take in, but if you watch the other market update webinars and educational webinars on the YouTube channel, you'll really start to connect the dots between the fundamentals and the technicals, right? So anyways, for gold, to summarize, if we still hold above 1759 on the intraday time frames, 1764 still buys, 1772 still buys. Green boxes buy areas, even break above 1772. But I'm going to start looking for sells if we do go all the way up to 1781. The safer sells would be below 1751. If we don't have any further pullback and we come back with the macro sentiment of dollar strength. But for the time being, dollar is in pullback structure and short-term bearish. Okay? So now on GBP USD, you can see on the intraday time frames we're respecting some bullish market structure as well. And I still see deeper pullback potentials playing the dollar weakness. Okay? So if GBP USD comes back to 1.356, still short-term buys, breaks and retests above the current zone buys, break above 365 buys. Okay? This is also going to make sense because I'm expecting the UK economic data overnight at 4:30 a.m. Eastern to still be pretty solid. So we might get a little pullback to retest this area and create a daily lower wick, but green boxes are still buy areas for me on GU. I would only start to look for sells if we come back up to this previous price sensitivity area or if we broke below 1.35. But in the short term, at least overnight and until the New York session going until 10 a.m. Eastern, I'm still anticipating dollar softness and dollar in a pullback for the new month and new quarter and playing that pullback structure accordingly because we know how strong the dollar domination is in its correlated pairs, right? And does that make sense when I showed you guys the same time that, does that make sense the same time I showed you guys that the dollar is in that bearish pullback structure? Every other pair against the dollar, GU, EURUSD, is pulling back from a low printed. And you can see that these pairs do very aggressive pullbacks the same way the dollar does. Does that make sense? How you can track the macro fundamentals of the Fed tapering alongside the market waves, lining up the technicals, watching the economic data. Yeah? No? All right. Okay, EURUSD, if we break above 1.63, still looking for short-term buys to retest 1.685. Looking for potential sell entries at this area. Would only be looking for safer sells if dollar strength came back into the table and the main trend buyers jump back in the scene and we broke below 156. Red boxes are always sell areas. Green boxes are the buy areas. USD Cad, as we're playing that short-term dollar weakness. We played this range prior, but UCAD is known to do some aggressive pullbacks as well. This was at the previous low, sorry. So on UCAD, as long as dollar stays relatively bearish, still looking for sells at a retest of 1.26 or the break below 1.258 key level. And this is going on the higher time frame to target 1.25 flat. If we do have this continuation downside move in dollar pullback, I would only be looking for buys if we come to same time dollar collects buyers. I could see a very strong bounce on this daily and weekly zone on UCAD at 1.25 flat, or if we broke above 264. Otherwise, across GU, EURUSD, and USD Cad, we're playing the short-term dollar weakness and playing that to our advantage. All right. So that's analysis on EURUSD, USD Cad, GBP USD, gold so far. Obviously, with the economic events, I expect the UK data to be pretty solid overnight at 4:30. Still well above 50 numbers and at pre-pandemic figures. And at 10 a.m. Eastern, the US ISM non-manufacturing PMI, I do expect that to be good as well. So that might start to bring back some short-term dollar strength, but that's still another more than 12 hours away from now in terms of intraday analysis. So the only time I would anticipate some potential dollar strength to come back in the scene is probably during the New York session at 10 a.m. Eastern, if that ISM data is still continuing to be strong. Now, GJ still bullish on the higher time frames, and I'm going to show you guys this little cheat code of historical repetition as well, okay? That most people won't understand. You're going to have to watch the other Capital Hungry webinars. But hey, institutional demand zone lows, that price was brought here on GBPJPY due to fundamental catalysts. This 2008 financial crash, this revisitation of the lows, Brexit, this revisitation of the lows, pandemic, right? When the short-term market fear is so high, Japanese yen picks up so much strength, and you have an outflow of liquidity on your risk currency baskets, right? Then, as you come to this area of interest, you can see 2008 historical repetition, and compared to Brexit, you have this upside move as buyers sweep up those lows, but overall market fear is not faded out yet. You revisit those same lows, collect even further buy orders, which happened here in the pandemic, and then after that point, you have a strong, extensive economic recovery rally, which we can see the phase that we are in right here, that goes up to retest that previous price sensitivity area right here. And when you have a retest of this previous price sensitivity area, you can see you get almost 3 to 4 months of a pullback. Here, GJ had 4 months of a pullback. Overall bullish market structure is still extremely strong, and Japanese yen is bearish. And then as buyers enter the market and you break out of that short-term corrective pullback structure here, or for example here, you continue up with the overall trend, break above that price point, and continue the further economic rally, which is also going to make sense as we get closer and closer to GBP interest rate hikes and Japanese yen still remaining relatively flat as a safe haven currency. Right? When you zoom in, you can see it even closer here in terms of the exact timing of the pullbacks too. It's almost the exact same price points. So even though GJ was in a higher time frame range, you can see the same thing historically here, where you were in a range and pull back on GJ for 4 months. Here it was like 5 months. You don't break that demand zone low here across the board, which is the same exact price point that's still been respected 2021 period. you break above that intraday bearish market structure that was extended for a period of 3 months, and then as you continue with rate hikes and so forth, right, and the fundamental catalyst to keep GBP bullish, you can see you finally get more buyers in the market and continue up with this overall bullish market structure. Okay? So now when you're looking at GJ here as well, look at this. On the daily candle, the new monthly and quarterly candle, it came all the way down to revisit this same demand zone lows and failed to break. Right? Now when you look at this bearish corrective structure, as long as we don't break 149, as long as UK stock market is still relatively bullish, UK economic data is still rebounding, more UK citizens are getting vaccinated, then all we're pretty much going to have, we might have a pullback, but as soon as we start breaking above 152, we're going to enter back into the bull rally to revisit these highs at 156 and potentially higher. All this was a higher time frame range and still overall bullish market structure. Here you had some very nice upside pullbacks. Here you had a liquidity zone and breakout. Overall though, bullish market structure, higher time frame. So GJ on the intraday time frames as well, when you're looking at the daily price action, very bullish off this reaction at this 149 demand zone. Japanese yen would not follow the dollar. It doesn't have the same impact as the dollar due to the Federal Reserve impact on the dollar. Right? Japanese yen is still very bearish overall, even though it had an intraday bounce here that just came from the inflation fear headline from Federal Reserve Bullard. Japanese yen is still bearish on the intraday time frames and higher time frames, right? So now when you come to GJ here on the intraday time frames, you can see we're starting to create this little bit of a bullish market structure, but even if we still remained above 150.5, I'm still on a bullish bias on GJ. So this is what I'm looking at is even 0.800, 155, still bullish, breaks above 152 buys, breaks above 1.5 buys. I would personally only switch out of my higher time frame buyer bias on GJ if UK equities have a fundamental catalyst to turn bearish, but we'll look at equities in a second. They're still very bullish across the board. If UK economic data is very bad, and if we break below this liquidity zone and previous lows that brought us into these new intraday highs here, you can see bam, bam, liquidity zone, intraday highs printed. I would need to break below these price points on the intraday time frames for me to be bearish. Okay. Last but not least, US stock market index. I still am noticing some a little bit of short-term fear, price setup for the new quarter and so forth. But when you're looking at global equities across the board in terms of market sentiment, you can't ignore that all global equities are pretty much sitting at some type of all-time high or just having a new quarterly pullback from all-time highs after pumping extremely bullish for the last year and a half with the support of the central banks, right? And obviously coming out of a pandemic state, investors and smart money riding the waves of the central bank, riding those injections, right? So even though US 30 is in some pullback structure, you can't ignore that on the higher time frames, as long as we're above 33K, and if we don't get any breaks below this area, on the higher time frame, we're still bullish. So in terms of some intraday style trades on US 30, if we come down to 33,800, still see some potential upside or buys above 34,300. GBP fundamentals would be bearish if the UK economic data release overnight in terms of PMI is poor, right? If that data is poor, or you see any headlines in your news headline resources about Brexit or about any pandemic negativity in the UK, you'll notice if it's going to have a bearish impact because you'll see a drop in the UK stock market index from these intraday high points, but it's just been in a higher time frame range here. So if you have any negative fundamental volatility, you'll see investor confidence in the UK market drop in the short term, which means a drop in the UK stock market, and also GBP would drop in the short term, and Japanese yen would pick up strength too. I would need to have that type of market fear, which we don't have, and a break below 150.200 to sell. Otherwise, I'm still on that buyer bias that I gave you guys. Okay. Okay, so everybody, so understand that it's still early into the new quarter and new month, so we do have a lot of order flow setups on the higher time frames like I'm showing you guys. Overall, the macro sentiment and market sentiment is still following the Federal Reserve's policy positioning and other central banks, which are giving signals that the economy is in a much better situation, especially if more people get vaccinated. And they are, the feds at least are getting closer to potentially tapering off the stimulus support to further supplement their stimulus support tapering impact. And to further price that in, we're going to need to see strong labor market data, but that is on Thursday and Friday. In the short term so far for the new month and new quarter, we can see the US dollar is bearish, just in a little bit of pullback as it's setting up for the new month, of course, and still higher time frame bullish. So on our intraday time frames, we're looking to take advantage of that short-term pullback on the dollar with those trade ideas given accordingly. The focus is obviously on the U.S. employment data, and we did have a little bit of market fear during New York session around 10:15 a.m. with Federal Reserve Speaker Bullard discussing inflation risks, which obviously led to that spike on yen and that short-term drop on GJ, still maintaining intraday bullish market structure. Gold had that aggressive upside spike as investors hedge inflation risks by pooling into gold, and the U.S. equities had an intraday drop there as well. Right? Economic events, China holiday, 4:30 a.m. Eastern, UK PMI figures, 10 a.m. Eastern, US PMI, 9 p.m. Eastern tomorrow, New Zealand interest rate. Don't forget, as a manual retail trader, that at the end of the day, it's not about being right or wrong in the markets. You're going to learn that as you further mature and gain some more market and financial maturity. It's all about risk management, probabilities, and doing analysis based on knowledge that you have developed as well as experience that you have developed. Because at the end of the day, there's 1,000 ways to trade the market. You just have to really be consistent with what brings you profits in a very consistent risk versus reward ratio, by following your trading plan, risk management plan, focusing on the long-term vision rather than short-term satisfaction, and trying to delay as much instant gratification as possible. And this is the best way over repetition and over years that you increase your emotional control and focus more on the probabilities and numbers rather than your emotions, you know? Don't forget to follow all of your Capital Hungry resources, Capital Hungry News Twitter, Capital Hungry YouTube page itself. Right? Tons and tons of educational webinars, Capital Hungry Telegram analysis channel. And that's it for today. Keep these pretty short and sweet. I will see you guys Wednesday morning for the New York scalping session. That's just my 2 cents on the markets, bit of precious metal outlook, looking at dollar, looking at some fundamentals that are taking place, economic events, market sentiment, equities, and so forth. All right. So I'll see you guys Wednesday. Everybody take care.